Hey everyone, welcome back to the channel. Today, we're diving into one of the most fascinating economic stories unfolding south of the border, Javier Milei's 2 years as president of Argentina. It's December 2025, and Milei just marked his second anniversary in office on December 10th. For American viewers interested in global markets, emerging economies, and bold free market experiments, this is must-watch stuff. Milei's libertarian approach, slashing government spending, deregulating like crazy, and fighting inflation head-on, has drawn comparisons to Reagan-era policies or even Trump-style deregulation. But has it worked? Let's break it down with the latest data, the wins, the pains, and what it means for Argentina's future, and maybe lessons for us here in the US. When Milei took office in December 2023, Argentina was in dire straits. He inherited hyperinflation running at over 211% annually, the highest in the world, a massive fiscal deficit, crumbling reserves, and poverty affecting more than 40% of the population. The country had defaulted on debt multiple times, and the peso was in free fall. Milei, the self-proclaimed anarcho-capitalist with his famous chainsaw symbol for cutting government, promised a shock therapy plan, zero deficits, massive spending cuts, deregulation, and lifting currency controls to unleash free markets. Fast forward 2 years, and the headline achievement is taming inflation. This was Milei's #1 priority, and he's delivered big time. From that peak of 211% in 2023, annual inflation plummeted to around 118% in 2024, and by November 2025, it's down to about 31.4% year over year. Monthly inflation? It's been hovering around 2 to 2.5% in recent months, the lowest since mid-2020. In October, it was 2.3%, November 2nd, 5%. That's a dramatic drop from the 25% monthly spikes when he first took over. The IMF and World Bank have praised this disinflation as one of the fastest stabilizations in modern history, achieved without price controls but through strict fiscal discipline. How did he do it? By achieving something Argentina hadn't seen in over a decade: consistent fiscal surpluses. Milei slashed public spending by about 30% in real terms, cutting ministries in half, laying off tens of thousands of public workers, eliminating subsidies on energy and transport, and freezing public works. For the first time in 14 years, Argentina ran budget surpluses month after month in 2024 and into 2025. This restored credibility, lowered country risk from over 2,000 points to around 750, and allowed the central bank to rebuild some reserves and cut interest rates aggressively. The economy is now rebounding strongly. After a tough recession in 2024, GDP contracted around 3 to 4% due to the initial shock. 2025 has seen a V-shaped recovery. Quarterly growth hit 7.6% year over year in Q2 2025, one of the strongest rates in decades. The IMF projects full year 2025 GDP growth at 4.5 to 5.5%, with similar numbers into 2026. Sectors like mining, energy, and agriculture are booming, thanks to deregulation incentives like the RIGI program, attracting billions in foreign investment. Exports are up, private credit is expanding, and real wages in the private sector have started outpacing inflation, up over 3% in real terms for many workers. Poverty tells a similar turnaround story. It spiked painfully at first, to over 53% in early 2024, as the austerity bit hard and the peso devaluation crushed purchasing power. But as inflation cooled and the economy recovered, poverty fell sharply. Official data from Index shows it dropped to 38.1% by late 2024, then to around 31.6 to 36% in the first half of 2025, the lowest since 2018. Independent estimates from places like the Catholic University put it around 36.3% in Q3 2025. That's still high, millions are struggling, but it's a massive improvement from the peak, with targeted social aid helping lift over 1 million kids out of extreme poverty. Milei's midterms victory in October 2025 was a huge endorsement. His party surged, giving him more leverage in Congress to push deeper reforms like labor market flexibility and tax cuts. Markets loved it, stocks and bonds rallied hard. For US investors, Argentina is looking attractive again in sectors like lithium, oil, and tech, especially with Milei's pro-business stance and close ties to figures like Elon Musk and Donald Trump. But let's be real, this hasn't been painless, and critics have plenty of ammunition. The initial shock was brutal. Unemployment rose to around 8%, with nearly 140,000 private sector jobs lost by late 2025, and over 19,000 companies closing. Construction and industry got hammered, down 24% and 9.5% at points, due to cuts in public works. Real wages and pensions took a hit early on, the minimum wage covers less of the basic basket now, and utility bills skyrocketed after subsidy removals, eating into household budgets. Many Argentines, especially in the middle and lower classes, feel squeezed. Consumption fell over 20% in 2024, and while it's recovering, everyday costs for food, rent, and energy remain a grind. Public sector workers and pensioners have seen real incomes drop 15% or more. Protests have been frequent, and inequality concerns linger. Critics say the pain fell hardest on the vulnerable while exporters and big firms benefited from the devaluation and deregulation. Skeptics point out risks ahead. Reserves are still low net of debts, the peso remains overvalued in some views, and without deeper structural reforms, like labor laws to reduce firing costs or full dollarization, Milei could face setbacks. External factors, like global commodity prices or U.S. trade policies under Trump, add uncertainty. Some left-leaning sources argue this is classic neoliberalism, stabilizing macro at the expense of social fabric, potentially unsustainable without growth trickling down faster. Yet, even many critics admit Milei avoided the hyperinflation collapse everyone feared. He's proven doubters wrong on several fronts, like the 108 economists who warned his plan would devastate the poor. Instead, after the short-term hit, indicators are improving across the board: lower country risk, rising investment, and a path to single-digit inflation by 2027 if trends hold. So, what's the takeaway for us in the States? Milei's experiment shows that aggressive fiscal austerity and deregulation can crush inflation and spark growth in a broken system, but it comes with real human costs up front. It's like a high-stakes version of debates we have here, balancing budgets versus stimulus, free markets versus safety nets. With Argentina eyeing closer ties to the US, maybe even a free trade deal, this could open opportunities for American companies in energy and mining. 2 years in, Milei's Argentina is a tale of shock, recovery, and cautious optimism. The chainsaw cut deep, but the patient is stabilizing and starting to run. Will it lead to sustained prosperity, or hit new bumps? Time will tell, but it's one of the boldest economic reboots we've seen in decades. What do you think? Miracle or mixed bag? Drop your thoughts in the comments, like and subscribe for more global economic breakdowns, and hit the bell for updates. Thanks for watching, see you next time.